Hello everyone, welcome back to our channel.
Hope you have a wonderful day. In today's video, we're going to talk about, our
Investment plan.
Yes.
Our update or our process, what we're thinking and what we are going to do.
Yeah, so after experiencing a few years of micro investing, I realized, I wonder if there's another way.
So how we started this channel mainly is by the micro investment. So we started with Spaceship and Raise first. I think it was just started off pandemic in 2020.
Before the pandemic,
Just,
it was January.
just before?
Yeah.
Yeah, around that time. So we started in 2020.
Yep.
And then same as the channel.
Yeah.
And then we record our portfolio through this channel. And then, but now why we started, because we just want to try something with a small amount and see if it works.
Yeah, so and then realizing that there is potential growth for this, and there's another way that you can actually earn income from a source versus if you're working for money.
Yes.
And I realized, okay, then that we did try a few different things. One of them would be property, but with property, I realized the entry point of that is really high.
Yeah,
you're looking at $50,000, $100,000, thousands of saving.
Yes.
So I'm like, okay, then how can I document this in a different way? Whereas micro investing, you can start as little as $5. I mean, it's great learning curve, let's say, with micro investing, using Raise as well as Spaceship.
We started from there, and then we added CommSec Pocket.
Yep.
And also Vanguard.
So now we have 4 different accounts.
Yes.
So subsidies like split in
And
Spaceship.
I'm thinking for another one for the kids.
Yeah.
I haven't done it yet, but I'm just doing research for that.
Yeah, and after experiencing Raise and Spaceship, with Spaceship, in a sense, it's not like tracking what the daily. It only comes once a day as the reporting.
Yep.
So for me, it's like not really.
Well, it is micro investment, and it's based on the companies. It's like a management fund. They choose whatever the stock they buy and sell, and you don't
have a say to it.
You don't really know the decision, how they choose it. They will tell you eventually once they make the decision. But then we just feel like, oh, well, we have to depend on some fund manager. Why can't we just do traditional ETFs? So now we're trying to go to more proper way. And also what I'm looking for is CHESS sponsored.
Yep.
CHESS sponsor is your share is held with CHESS. So if the broker, they don't exist anymore, you can transfer the CHESS to another broker. So because Raise and Spaceship is based on that company, if Touchwood, that company, they go down, then the money...
Bye.
No, no.
So that was what our learning curve in the past, I guess, few.
Not really
months.
learning curve. That's what is the risk?
Yeah, the risk involved.
Touchwood, they're not closing yet.
Yeah. So on top of that, we try to diversify and using different platforms, so that way we can earn different way
Avenue.
for our money to work for us.
So at first, doing Raise and Spaceship is small amount.
Yep.
We're testing because we didn't have a good experience about investing in shares or trading. So we started from there. Then we realized that actually in long term is okay, but when we invest in particular in Spaceship, there's no dividend payout. I've never seen dividend payout in Spaceship. Raise, they have dividend and they will reinvest. So which is, I like it, but then still it's small amount.
It's a small amount, but it automatically reinvested. And then from there, we're thinking of
CommSec Pocket, right?
Yeah.
We try CommSec Pocket, and that is small amount of the ETF, and they do pay dividend as well.
And
it's CHESS sponsor.
It's CHESS sponsored and pay dividends. And when I first received the dividends payment, it's like, oh, kind of
what is that money?
What is that? I thought somebody just transferred money accidentally.
And the thing is, because in CommSec we invested more, so each trade when we place in CommSec is $1,000 minimum.
Correct. Versus $5 minimum.
So then you see that it's different. It's bigger money in CommSec Pocket as well.
So if you're starting point, I guess, if you want to just do it with a spare coin here and there, definitely
Try that.
I guess the learning curve, it would be that using Spaceship or Raise.
Yes.
And then from then on, from our experience, like okay, then if we're looking at in a bigger picture, then we go to the next level, which is using the CommSec Pocket.
CommSec Pocket is still a pocket, a small one.
It's a small version.
And then we step forward again.
Step
we
up
went to step up to Vanguard. But Vanguard in Australia, you mainly can trade the big company, big
Australian-based.
ETF, big Australian ETF. I think there's international as well. But there are some of them we couldn't trade. So now that's the problem. What happened? We want to trade in particular some of the ETF. They don't have it. And the ETF we're looking for is high dividend or high yield.
High yield dividends international.
Yes, so which means they will pay normally 4 times or 2 times dividend per year based on how many shares you're holding with them.
So
Yes,
that's where we at.
correct. In Vanguard, we do one Australian high yield dividend ETF. We have that. But then we want to trade more. And then you found out, actually CommSec, they do trade it.
And because in CommSec Pocket, in order for you to have open up a CommSec Pocket, you have to have a CommSec account.
Bank account.
I'm like,
Right?
yeah. So you gotta have a bank account. One of the ETF that we hold in CommSec Pocket, actually, that pay off dividends, it was one of the research point, let's say.
Yeah, one of the ETF we would like to invest more.
Yeah, and then realizing if you open up a CommSec account, you automatically have the access to all the investing side of it.
Yes.
So in the share aspect of it. So now, because we have CommSec Pocket, we have Commonwealth Bank account, we're gonna look around for other dividends.
Dividend, ETF, that with dividend.
So overall, I'll look around. So far, we found, what is this one? I think 1, 2,
6.
3, 6 of them, 6 different dividend, I guess, dividend ETFs, yeah. But 2 out of 6 is actually managed fund, which we not really.
Now, currently, we're not looking at managed fund because managed fund it is still require a fund manager to manage that fund. They can sell some stock or buy some stock just like Space or Raise. So we want more transparency, want those ETF that's listed in the share market.
So by doing that, we actually downloaded, I guess, the ASX app, and I just searched for under dividends. And that's how I found the whole ASX.
Okay.
So, and then I can buy those shares, the ETF, let's say, from our CommSec account.
Yep.
And we calculated as a whole on an average between let's say 4 to 5% return.
Oh yes, the dividend. So how we do it is we check on the history paid out for the dividend just for last 2 years. So average is between 3.5 to 5%.
Yep.
As the yield.
Yep.
Which means, let's say, if you have $1,000 invested in there, throughout the whole year, you would approximately receive $4.
Yeah.
Is it dollar? $40? 4% of 1,000. $40. 40.
Yeah, $40.
$40. You try.
Times about 4%. Okay. $40.
Yes.
So that's on an average about 4%, which is what our target base.
4%. Because we did another calculation with our property that is paid out.
Yep.
Like no mortgage. And then we put that all the number in there based on the tax return and everything. It's around 45% return as well.
So our property paying us out about 5%. So other investment has to be minimum. That's a benchmark.
Yes.
So that's how we look at it, based on the cash flow. Yeah.
Yes. So now we're looking into more cash flow instead of capital gain. Like we heavily invested putting money in Raise and Space. They are more capital gain. But now, after pandemic, I don't know what happened. It's like capital loss. There's no dividend. And then if I sell those stock or shares, we'll realize the loss.
Yeah, we don't want to realize the loss just yet.
Yes, well,
At least the break even.
Yeah, we'll just wait.
Overall, I think we're going to be stopping our daily transaction with Race
Daily
and-
investment, investment plan
Yeah,
with a micro investment.
instead of that, we're gonna
Save them as
yeah.
a lump sum and then put it in CommSec or Vanguard.
Then anything that has got high dividends,
Yep.
high yield dividends. So we're putting it down, possibly being more in CommSec Pocket on one of the account in there, and then in Vanguard another one, and then obviously the other 4 that we that I found as of this week or so.
Yep.
And trying to spread them out evenly. I guess to minimize risk.
Yeah.
So that's our journey, and we'll let you know how it goes.
Yes. We'll report to you guys about our dividend payment. Hopefully.
Well, I know for sure, like now, and because in a typical trade, like in CommSec Pocket, we have a minimum of $1,000
Per trade.
purchase. So,
Yes.
to minimize the cost. So every time we have $1,000, we're gonna put it in. So that's the game plan. How is it gonna turn out? We all know.
I don't know. We'll see. We
We'll
just
see.
whenever we have spare money, just try to put it in. We're not going to spend our money. We're going to invest before we spend.
So for us, it's the surplus income. The idea is like having more, I guess, passive income, more, I guess, money growing for another money.
Yes.
So that's the idea of it. When we have enough, okay, then we go over there and let it grow again. Keep on letting it grow. And on top of that, we try obviously to pay off our mortgages for our investment property as well. So we've got 2 more investment property that we need to pay off.
Yes.
And we'll let you know as we go along how we go about doing that. So if you like this type of content, guys, don't forget to subscribe, comment.
See you next time. Bye bye.
Bye.